Okay, now we can. What's going on, guys? Welcome, welcome. So this will be our first back testing Zoom call. Typically, a back testing is going over information that you already know. But as I can see from one of the message that someone said earlier, um, they're not familiar with trading. And if you're not familiar with trading, it might be difficult for you to completely understand right now what's going on. So what I'm going to do instead, um, is try my best to give you a little bit of beginner friendly information, but I'm not a full-on professor. I don't have a course where I can say, I'll go back to the course and reread this or read that. So if you are a beginner like I was once upon a time, I had books of notes. I mean, I had books of notes that I was taking. I review them, just information on top of information. So I'm not going to be able to give you all of that in one day, but I'll do my best to give you guys some sort of information to kind of get your mind going on understanding what it is and what trading is. I do believe that this is something that anyone can do. It's not rocket science. It just takes some time and effort. And if you're anything like me, you're very family oriented. You love and care for the people that surround you, then this is a field that you'd want to be in to have that financial freedom to be able to do for those people, right? And I just enjoy teaching and giving back to people that I know. So let's begin. For now, just in the chat, guys, I just want to ask, keep it you can make it like you remember. Okay, I think Lenovo, are you in the UNYU, correct? You in your RIMI course? Who's in your YU already? If anyone's in YU community already, drop a comment in the chat so that I know, because I don't want to. Miriam, okay, she's in YU. Marion's in YU. That way, I don't want to go. I don't want to. Okay, so we've got two people's in YU already. I don't want to try to go over the entire course that we already have. This is going to be an interactive back testing, guys. So you could turn your mic on. If you have questions while I'm back testing, feel free to ask me questions. Obviously, I'm going to speak out what I'm seeing, why I'm doing certain things. Um, Feel free to speak out, ask questions, pause me if you need me to, etc. Okay. So I don't want you guys to feel like you have to wait until the end of the session, which we will have an end of the session for certain questions. But for now, when I do this interactive, I'm just gonna go through my process. When I wake up, open the chart, what is the first thing that I do? All right. So let's begin. All right. So right now we're on the monthly. It's pretty much, and for those of you who are not familiar with trading, just follow along for now. Take a little bit of notes of what you think, what you're hearing for now. Over time, it'll start making sense a little bit. We'll give you more information. I'll give you more information. You can ask me questions in the Discord. I'll try to send you some of my notes if I can. But I do highly recommend eventually getting into a course, which I don't have one right now. So I recommend going to Urimi University, YU, and getting a part of that community. All right, let's begin. So the first thing I like to do, I'll start on the monthly, not to really take any look for any entries or anything like that. The monthly is just where I look to see what direction the market is going. All right. Um, Before I answer the course part, it's not about the course for me right now. I'm more focused on the trading aspects and developing. All right, boom. So let's start off with the monthly. We have our monthly structures. I like to mark out some of my monthly structures just so that it gives me an idea of what the market has been doing. As you can see, the market started off from up here. I can see that we're in a downtrend. I had a bullish up here. I mean, a high, a low, a high, a lower low. Internal, I wouldn't mark this one as an internal high because price went higher on this end. So I can mark that price swept this zone. These are just quick little markings that I'm doing off the top of my head, just eyesight, what I'm going off of what I see. But when it comes to entries and anything like that, it comes way down the line. So boom, I'm seeing here price I had already broken the structure here, but then it came down to mitigate. Just looking at the overall trend, this is way past. So I know that the high time frame is telling me Market is bearish. We're in a downtrend. And I'll continue. Same here. Low. If there's any question, guys, feel free to interrupt me and ask, okay? Low, high, lower than that one. Okay, lower, high, lower, lower, low. Boom. So just off this right here, I can see that even as I get closer to price action, the market is doing the exact same thing, still bearish, still bearish. Okay, boom. Next thing I'm gonna do now, I'm not gonna mark no trend lines. I'm not gonna mark anything like that. Why? Because this is too high of a time frame. By the time you jump in to take a trade, the market is not going to react towards your zones or any of the places you're expecting to get into. So I'll go down to the weekly. From the weekly, I'll take a quick look to see, okay, what is the weekly doing? What I look for in the weekly, I really get very close to price action. I don't pay attention to the all that's been happening back here anymore. Now I'm more focused between the last higher high and the last lower low. I mean low that happened. So this high and this low. I'm only focused on what's happening here and to the left. Boom. So what do I see? I see a weekly supply here that hasn't been mitigated. So I'm gonna mark that out. This is just me waking up, haven't marked the chart. Boom, I'm trying to see. This is how I would look at it. Boom, I see that this is what happened in the market. Price has a zone up here that it's headed towards. It hasn't mitigated it. Okay. All right. What else do I see on a weekly? Oh, I see there's a weekly trend line. Okay. So I'm going to mark out this weekly trend line. All right. Boom. Mark out the weekly trend line from the wicks, making sure that they tap. All right. Boom. So we have 1, 2, 3, 4 taps. So price is going along this trend line. I'm assuming it wants to tap into this zone. Let's keep watching. So I'll go down to the daily. Oh, before I do that, another location I see, another weekly zone right here, a weekly demand. So I've got my supply, I've got my demands marked. These are my high time frame zones. Now, I can say that price is building up right here, this build up of trend line, simply to induce it, mitigate either this imbalance of the weekly or this zone to then push up to either take out this zone. Or price could easily use this supply to mitigate it, to come down and take out this trend line liquidity and also take out the zone to continue the bearish movement that it's been doing from way back then, as you can see. We'll even mark this one here. What do we have here? Breakup structure. So price has already told us on the weekly level that it wants to continue down. All right? Guys still with me? All right, so let's go to the daily now. We've got our weekly mark. Now let's go to the daily so we can get a closer look of what's happening. As you can see, you barely can see any of the zones you've marked when you go down from a weekly to a daily. And what I want you guys to understand when it comes to that is, although you have these marks, let me find the zone that I marked. Although we have these zones marked, understand that price isn't, I think I see what happened here. The visibility, I usually edit my visibility so you don't see it I don't see them on every time frame. So I'm gonna fix this back so that you guys can still see it on a different time frame. And for anyone, as I mentioned, who's new, not quite understanding this yet, just follow along. This is just the first day, your first exposure in this. It may not all make sense yet, but over time it will. Just take a little bit of notes that you can, and we'll get there. All right, boom. Now we're on the daily. What do we see here on the daily? Similar to what you hear me always talk about. We still have our daily trend line. Although on the weekly, that trend line did go away, but let me bring it back. Like I said, because I use my visibility, I turn certain date time frames off. You don't see them. I don't like my chart looking messy. So I like to only see things on the time that I need it. Boom. So we still see the trend line happening. We still see our weekly zone here. Now we can, as I like to do, I'll make it smaller because I see a better zone here. Boom. Boom, boom. I see that this right here has already been mitigated. This OB has been mitigated. This OB here, this one, there's no need to push. There's no need to mark them out. I see there's a small trend line here that price may want to induce. That's really what you want to mark out what you see. Mark out what is it that you see because that's what's going to aid you in knowing which direction price may go. Okay, I see here there's not it's not one can say this is a relatively equal high, but I'll see that price has not mitigated this high yet. This high is still safe. It hasn't been touched. The last thing that price has done is all I'm doing now is marking what I see, guys. Mark what you see. You see that price broke structure here. Boom. So now we're gonna do some internal structures. Now it's time for me to mark my internal structures. Now I'm on the daily and I want to get down to the 15-minute, eventually 5-minute, then 1 minute to take a trade. But before I get all the way down to that point, I need to start from that monthly to break down and narrow down to an entry. I'm not gonna take a trade from a 1 minute, expecting it to go all the way to a monthly time frame or a weekly or a daily. From a 1 minute, the longest I may take it to is the next 1 minute structure, next 5-minute structure, maybe 15, depending on what price is telling me. All right, so let's continue. We got this low led to this high. Let me make this one a different color. So we'll make this our 15-minute structure. Oh, well, I can't make it like that because then it's gonna disappear again. So let me fix that so we can keep it. We're just gonna make it, actually, let's just do this. Let's make it size 8 and we'll make the color, let's make the color orange. Actually, no, let's make it bigger than size 8 because I know it may not be big for you guys to see. Boom. So we've got this zone here. Got this high, led to this low. We got this high, this higher high, led to this low. We got another higher high, led to this low. Low. Okay, now before I continue to the right side of the market, let me see where price came from. We know price came from up here. High, low, higher high, relatively equal, higher low, higher high, low, higher high, no, higher low, lower, lower low, higher low. My mouse is moving so slow. Higher low. I would mark this in a lower time frame. The reason why you guys may see I'm not marking certain internal structures right here, it's not because they're not structure. They are structure. The only reason I'm not marking them is because they're more like internal structure. I like to mark the swing high, the highest point price reached. From here, price didn't just get to here because from here, when it went up here, this high didn't go break this one. So that lets me know that technically I don't even have to mark this one. That's my apologies for marking this. And normally I would go high, low here, higher low, higher high, higher low, lower low, higher low, and then continue lower low here. So I can see all of the breaks of structures to confirm that price is in a bearish movement, right? This right here will also be an internal high and another low. So I'm not gonna mark all of them. I'm just trying to get all the way down to the point where I can show you where the change of character happened to let me know that we're now in a bullish market so that I can scale down to the lower time frame, like my 1 hour, 4 hour, 15-minute, and find my entries before I even take that trade. There's a few things we'll do. All right, boom. So this is where we're at. All right, you guys are still with me, yeah? You can hear me good. If there's any questions, feel free to interrupt and ask. I just want to make sure this is an interactive back testing. All right, boom. So we know from this low, price went to this high. From this low, price shot over this high. Change character, break structure. It's very clear, very easy to see. So all right, let's go down to our 4 hour. Now, in the 4 hour, we're going to see more internal structure. Price may look a little bit different from what the daily, monthly, and all these time frames look like. Each time I go down in time frame, my focus is not on the far left of what's happened from way back here and everything. No, I'm specifically focusing on what's right here in front of me between this break of structure of this high and this low that came from it. So let's mark that from this zone here and this zone here. I'm only paying attention to everything in between here if price shows me a setup, because these are the structures that I'm going to be taking my trade down or up to. All right, boom. So once I'm here, what do I see? Mind you, I'm on a 4 hours. So now I'm looking for my 4-hour POI. What zone in the 4-hour am I waiting for price to come tap? And if I'm going too fast, guys, do let me know. Boom. So I got a 4-hour POI here. Point of interest. Those of you who's in a course, you already understand. You already told us very clear. What you want to look for is an engulfing candle. We have this right here. Boom. From the top of the wick to the bottom of the wick. We mark it out. More confluence to let us know that this will be a decent zone to take this trade in. We have some trend line. Pretty much right there. It's not the most cleanest of trend line, but we could say it's a trend line, right? We have a trend line right here. Price is following underneath this zone. And we had our change of character happen right here. But on a lower time frame, it happened way sooner. It happened already. So we'll say we had our chalk right here. We had our change of character here. Boom. We had another low here. Now, for every time you come to another time frame, you want to mark out your structures again. That's been key for me. You guys see me post sometimes on Instagram these different trades that I get into, and I get all this, I really get into it, breaking down the entry, etc. That's because I've already started from the top time frame with all of those different markings that you see. And then when I get down to the lower time frame, I still have structures marked because I'm taking trades from structure to structure. The high time frame is just giving me an understanding of which trade is going the pro direction, the pro trend, and which trade is going counter trend, meaning internal structure. That's all is the difference of what I'm focused on. So right here, we could easily see price swept this trend line. This is on a 4-hour, guys. Remember, this is 4 hours. So we're not looking at this to say it's time to take a trade. We're just looking at this to understand that we are in this section right here in a bullish market. We're uptrend. Boom. Until price comes and break this here low, for example, because until price breaks this here low, you're in a bullish market. Because this high led to this low, and this low led to this high and broke this structure. So this is the last structures. These are the last structure. I like a triangle. This is the last structure that we're playing in between right now. We're trading in between. Boom. Let's move this over. Let's get back towards the inside of this. All right, so we know that right here we had low. We had this internal high. Man, if my mouse would stop doing this slow movement stuff, it would be a lot easier for me. All right, low. We had another high here. We had this low, obviously, and we had it led to this overall high. We had a couple of them, but we'll use that one. And then we know that we had a change of character right here. Price change characters right here. Right here, price decided, you know what? I want to go up and be bearish. So I'm going to mark this change of character. Now understand, I'm going to quickly jump back to the daily for a second so I can show you guys something. Understanding what the higher time frame told us, which is, oh, excuse me, what the higher time frame told us, which is since here, we've been bullish. On a daily, price change character here and broke structure here and this structure here. So from here, we know we're bullish. The whole market is not bearish, continuing downwards until it breaks this here zone. Same way we had this. We're not into that. We're not in the bearish market to come get this zone, this low, until price breaks this zone. Same thing applies here. Until price breaks this zone, you're not going to say that this is the pro trend. We're in a pro trend. We're back to the pro trend yet. That's what's going through my mind as I'm scaling down. I'm just giving you guys a breakdown of what's going through my mind every day when I enter the trade. So this right here would be my analysis perhaps the night before I wake up and get into the trade, because when you're getting into the trade in the daytime or in the morning, you won't have as much time to go do all of this analysis, take your sweet time and do it as you please. Um, so make sure you keep that in mind. You want to do your analysis a little bit earlier, a couple hours earlier, a day earlier, just so you give yourself that grace when you do come into the session. All you have to do is just glance at the daily to see what the last daily candle did to understand what it's about to do for that day. Well, what it did yesterday to understand what it's going to do on today. All right, but let's continue for now. We know we got our change of character right here. Um, we know we also had our breakup structure right here on a 4 hour. So right now we found our 4 hour supply, but we haven't found our 4 hour demand. So let's mark out 9 hours for our demand. Anybody have any questions so far? Feel free to ask. I know some new people have gotten in here. This is an interactive back testing. If you have any question, you can put it in the chat if you don't want to speak loudly. If you do want to speak loudly, just go ahead and unmute your mic and speak up. I'll pause and answer your question or try to work with you on what I can. So we got change of character, breakup structure. I don't see here any unmitigated OB. All I see is there's a small gap here, but I'm not expecting price to all of a sudden dump to this gap just to push up or anything like that. No. So I'm going to see where we're at right now. Currently, we have internal structures. This high, we have this internal high, led to this internal low, led to this high right here that broke this here structure. So I know that right here is a zone that price was attracted to because it was a low that led to a high that broke a structure, as we've always known. That's how it represents that this is a significant zone. Now you're going to see me mark this as an OB. You may not quite see it or understand it. You might say, well, how is it? Because there's not an engulfing. It is an engulfing on a higher time frame. Right here, you can't see that, but after so many times, you'll notice that these small little bullish on a daily, or I won't even go that high, on an 8 hour, 12 hour or less, you'll see that it's a full-on candle. I need to turn this off again. It keeps doing it keeps hiding my visibility. Oh yeah, it's on the hour. Let's make sure let's do it up to the 12 hour. That's, by the way, guys, the visibility is a huge hack. If you want to be able to look at your chart and not have to worry about your thing looking so messy, huge hack. So let's go 12 hour. As you can see, every time I go up on time frame, it's becoming less and less candles. You'll see to the point where there's going to be one engulfing candle by itself. So it might be on a daily. Let me see. Boom. There you go. So we're at a daily zone right now. So boom, we understand now. You understand why price is reacting, I should say, from this zone. Why? Because you have a daily here as well. You got a daily support, a daily supply, and a daily demand that we're playing in between. So price tap this, you know that because Yerimi always told us the invalidation model, which is if price taps the supply, which is your up here, let me mark it as supply so you guys can not just look at colors, but you'll see what it is. Matter of fact, let me just type it. The top side is your supply. And some of you guys in the course, you already know this, but for the people who are not in the course, do you justice? I'll mark out supply. The zone at the bottom will be considered the demand. Okay. If price came and tapped the demand before it tapped this supply on a lower time frame, like 1 hour and down, this supply will be invalid. It will break through it. But on a 4 hour and up, that doesn't apply. I want you guys to, if you didn't know this already, I want you to really put that, no, I didn't rehearse anything, my brother. I'm just going through what my mind process is when I come into the chart. When I first wake up or when I'm getting into a trading session, this is my thought process. And then we're going to all eventually get to the point where I enter a trade and we look for a trade. But right now, this is the build up to get to a trade. You don't just get in the market and you think a trade is in front of you. I build up to get to those trades. That's why you'll see some of those posts I make is because I took the time to build up and see where the market is. Trading is like being a surgeon. You're not gonna go to the hospital and let a doctor operate on you and their hands is shaky or they just woke up. No, you want a doctor who's has steady hands. They've read and they understand the anatomy of your body. That's part of trading. You want to be a surgeon. All right, boom. So now we can refine this daily zone because we understand that it was a daily. So we can refine it to know that we have an OB here. So that lets us know that price will go deeper than just this area. It'll go higher up here. It'll mitigate. It's a retest. As we can see, it already changed character up here. But let me not jump the gun and go to the next phase. All right, so we have our structures marked here. So let's go ahead and finish marking these areas for you guys because it's going to be important to see these structures when you go down time frames. It's going to help you know where price is at. Boom. So now from my 4 hour, I see what's happening. I can say, okay, there's a trend line here that was swept. We broke structures here. We broke another structure up here. So price is still interested in going up. This last high right here, another break of structure happened. So all of this is confirmations for me, letting me know that price is still interested in going bullish. Even if this change of character happened, it already broke structure here. It lets me know that price at least wants to go up above this zone, another on the next side. So let's go down to the 1 hour. Now, boom.
Hey, a minute, a minute.
On the 1 hour, what do we have here? We have the break of structure still. I have my change of character. I have all these internal change of characters. I'm not paying too much attention to them because anytime you see internal break of structures like this, break of structure as you see here, break of structure as you see here, price is going to use those as liquidity. So what I like to do, like I've told you guys before, when I see a zone where price is just consolidating, I simply mark it as a consolidation zone. And what did I told you guys last time? If price breaks to the bottom or up, whichever direction price breaks first, it is going to go the other way before it makes the next move. So as you know, it already broke down. It mitigated this zone. What can we expect? We can expect price to come take this trend line liquidity here, to sweep this liquidity, to also come mitigate or push through this zone. Now we know we have these structures here, so we can't just assume that this trade is just going to push us all the way up here. Granted, that's what we're expecting, but we're not just going to take that jump because price did break structure here. It broke structure here. We had a BOS here. Same way, we had another one happen here. Okay, so we know that price is breaking these structures and it's still going down. All right, so from the 1 hour, do I have a 1 hour POI? That's what I'm looking for now. I'm not focusing on this demand zone here that's already been mitigated. No, what I'm focused on is now, where can I see price showing me that it's attracted to? All right, so we could see right here, we have a 1 hour demand right here. That price left. It may not be as clear for you yet, but I'll show you so you can see the structure aspect of it. All right, so we're gonna mark this as unmitigated OB. All right, and let's move this here a little bit back since price mitigated it here. Boom. Unmitigated OB. So we can see that price has already broken this here structure and also broken this high. How can you see it better? On the 15-minute. On the 15-minute, you can see the full structures. All right. Now look, here's what we got. Now you got a clear 15-minute zone for price to retest. As you can see, high, low, high. You won't count this as the high right here, simply because, oh, another secret I want to tell you guys. This will change your life. This secret was given to me. I wouldn't call it a secret, but this information was given to me by someone when I was having issues with structure. So that's kind of what I want to focus on with all of these backtesting Zoom calls, is to give you guys a little bit of information that I came along with, meaning like I've discovered that wasn't specific below. If it touches the demand, it will obviously, and if it doesn't apply in the 4 hour and above, pardon that, please. Yeah, I'll go back over that, Lenovo, 1 second. This information here I'm about to give you, keep this in mind, write it down, whatever you want to do. I just want to make sure with these Zoom calls, I want to try to give you information that either I've picked up from the course or I've picked up from networking or backtesting or communicating with other traders who still trades the same strategy, but they're giving me insights because of their expertise. Perfect example here. When I said why I wouldn't mark this as a structure. This right here, because it's a 15 minute, I know on a 5 minute there is structure in it, but I'm just gonna skip to the 5 minute real quick, guys, just so I can give you this detail. And this will help you when it comes to your structure for the rest of your life, I promise. Why is the 5 minute not going? Oh, it won't even let me go down that low. Don't worry, that's fine. Let me go to mm, let me go to a current. Let me do this. I'm gonna go to a current market that I'm using right now, so I can show you guys something. Let me go down to 15 minute, a 5 minute. What? Even on this, it won't let me go to Euro USD. Okay, so it looks like all of this is stuck on one page. So don't worry, I'll explain. But on a lower time frame, we know structures are respected in the 5 minute, 15 minute, 1 hour, and above. Those are where when you mark your structure, you know that when price get there, it's either going to respect it, induce it to go the other way, or break through it. But those you can mark as an actual structure. Here's the ones you should not mark as a structure, because price is faking you to make you think that's a structure. And usually it'll be swept because you would have a position there and it's not. Very simple. If this was a 5 minute right here, this little area, if this was a 5 minute, that would not be a structure. This right here, from this high to this low, would not be a structure. And you would think this high to this low led to this high, broke this here structure. No, that is not. That's a fake out. You're gonna get liquidated. Let me tell you why now. In order to identify a structure, and this was not something that was said in our course. I kind of learned that along the way from speaking with another trader, and it's helped me ever since. You want to look for 3 momentum candles or more. Minimum 3. As you can see here, like I said, imagine this is the 5 minute. This doesn't apply to all the time frames. This doesn't apply to 1 hour, 4 hour, daily, because within those, one daily candle has hundreds, I mean not hundreds, but a bunch of structures in it. So this does not apply to the high time frame. This applies to your 5 minute structure when you're marking structure down on the 5 minute, because market can and at times will respect a 5 minute structure. As you can see here, one momentum candle right here, and this is the two black, these black candles, bearish. 1, 2, and then what happened? The third one, it was a bullish one. This is not a structure. Don't fall for this. This is not a structure. Instead, that's why I say I mark the swing highs and swing low. So this will be a high from the Asia. Obviously, price created that high because it started from down here. So this was the low, this was the high, this was another low. As you can see here, momentum, once more than 3 candles. Another high was here, more than 3 candles. Another low, more than 3 bearish. It had one bullish, but that's fine. If it has multiple and it has one bullish or two and it continues down with more bearish and then turns around, that's a structure. But I'm speaking specifically about a situation like this where it does 2 and completely turns around and takes that high. Not a structure. Don't fall for that. Okay? So we know this right here. You can say this is a structure, right? But no, we wouldn't even mark it because look how I did it. 1, 2, bullish. 1, bullish, 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 bullish. That's a fake out. On a 5 minute, I wouldn't mark that. I would just go straight to this one. Why? Because 1, 2, 3. There goes our momentum candle. Push again. This another high. Right here. 1, 2, 3, and more. That's our low. Bullish. That's another high. That's another low. That's another high, a lower low. This one I would ignore because as you can see, one, middle, two, bullish. Not a structure. Don't fall for it. But this one is, would I mark this one? Yeah, why not? Because it gives me a low right here, and it gives me another high right here, which caused a chalk right here. Change of character, break of structure, broke another structure. Price was coming here. One would probably take this trade here, assuming price coming to retest. But no, price is not coming to retest because our invalidation model already told us if price taps into the demand before the supply would fail. Price tapped into this demand, came up here. From here, came back down, tapped into the demand again. For price to come here and respect that, it's not happening. It's just faking people out. But now let me get back to the point of getting to our trade. I just wanted to give you guys that information. If you have a question about it with the momentum candles, as I mentioned, looking for structures and what's not structure, pay attention to the 1, 2, 3 of that candle. You need to see 3 of them. Minimum 3, minimum. Otherwise, it's not a structure. And that only applies on a lower time frame, like the 5-minute, the lowest, because 5-minute is the last structure or high. I mean, not high, but the last structure that price will respect. All right. Boom. Now let's continue. Where were we?
Hello.
Hello, hello. Welcome,
Could
guys.
you explain that a bit more in depth?
Sure. Are you
Um,
talking about the structure?
yeah, yes, please. I
Okay.
missed a bit of it.
Yeah, of course. So let me do this.
Thank you.
I'll dive more into it. And that's how I want this our back testing to be. Not so much focused on too much of me doing things you guys already know from the course, but just giving you the little bit of the gem that I've accumulated that may not have been said in the course. So to do that, I'm gonna have to turn this back testing off. I mean this bar replay off so I can go to, for example, let's go to the GBP USD. Perfect. All right, let's use this for example, right? Now I can go to 5-minute. Boom. Now let me hide this. So here on the 5-minute, because this is the time frame that this matters, okay? So let me show you this. I can get rid of all of this. Move some of these high time frame markings. Boom. All right. I'm trying to let me find a specific area on the 5-minute where okay, perfect. Look here. Okay, this is a this is a high. This high to that would be a high low change of character happen here. So yeah, that marks. That's why I have this OB here. So this wouldn't be a good place to show you an example. Once upon a time, I lost a trade specifically because I didn't know that information. I marked a certain zone as a high, expecting price to respect it because I thought it was a high, and it wasn't. Perfect. Here's one. All right, let's use this one here. All right. So from this tap, we had this high, low, which wasn't lower than this. That's why you see I marked this line here to remind me that price has not swept this low yet. You always want to leave signs to remind you what's happening. These bigger markings, these brown ones, are my 15-minute structure. Just a reminder, these are my 15-minute structure. These orange ones are my 5-minute structure. I know this 15-minute led to this 15-minute low. But inside this 15-minute movement that happened, and I'll go to 15 minutes so you can see it more clear. Right here. Where are we? Right here, my bad. I believe it was this area. Yeah, it was. See how this high led to, I believe it was this, no, it was this one, I believe. Yeah, this high led to this low. That's 15-minute structure. One can say this high led to this low as well because you have 3 momentum candles right here from this 1, 2, 3, and then it pushed up another 3 momentum candles. So I could say this is another 15-minute low, another 15-minute high, another 15-minute low to sweep this zone, but didn't take this one. But let's go back to the 5-minute to explain why there's these internal structures. So knowing that there's these internal structures there, you don't want to fall victim to it. So this high led to this low, didn't break this low, and you have these 5-minute internal structures. This is a change of character here because it broke the 5-minute zone. Now, Would I go and say, let me make the screen the chart taller? Would I go and say, don't want to use this one here because this is the overall, it led to this overall low. This is also another internal structure. Find a beautiful, perfect. Here's one. High, low. This is where it led to the Asia, Frankfurt. Frankfurt took it from here, not Frankfurt, London from here and pushed it up. This 15-minute low led to this 15-minute high. It looks like a lot of candles. It looks like there's multiple other structures. Mind you, I'm on the 5 minute. So these are all internal structures that's happening within that 15-minute move that happened. Now, would you go say that price came from this low to this high? Because you see one and then one movement down here and say that this is a low? Of course not. But if you don't know much of that, you may think so because if you're on the 1 minute, it looks like it. Let me go to the exact zone on the 1 minute so we can stay up to, where is it? Right here. On the 1 minute, it looks like it, right? Right here. On the 1 minute, this looks like, oh, this is a high. It led to a low. Yeah, this should be a structure, but that's on a 1 minute. Price use this to fake you out. This is just gonna fake you out. Look at all these wicks in this area. And if you're in YU, you remember what that analogy Yeremi gave? If you ever see a lot of like wicks in one area, it's almost like a drive-by or something. If you're in one of those dangerous countries, a drive meaning you don't want to be in that area taking any trades or part of anything. All of these wicks right here, which is also somewhat of a trend line, price did exactly what it's supposed to. It took it all because they were all liquidity. So let's jump back to the 5 minute. This would not be a structure. Now you may say, well, yeah, I wouldn't mark it as a structure because I can see that it's consolidating right here, right? Because it's just in this whole zone. So I wouldn't call it as a structure. Okay, what about this one here? Would you say this one's a structure? What do you guys think? Do you guys think this is a structure on a 5 minute level? Okay, exactly. Absolutely. It's not a structure because to answer that question, when you said explain a little bit, this is what I mean. Now, this is and can be a structure simply because you have one, two, one bullish, one, two, push lower and swept these. You can say this is a structure, right? You can say this was a high right here that led to that low that pushed up here that broke that structure. That's very internal. But would you put yourself in a position for price to liquidate you like that? Maybe not. But this right here is a structure, guys. It is a structure. This internal. This would be a 5 minute structure. Why did I not mark it? The timing of it. It's 4 a.m. I wasn't in there in that session. I didn't quite mark that. So this right here would still be a structure. So do you see the difference between this zone and this zone as to why this wouldn't be a structure, but this right here can be a structure? Because price reached up here from this low, from this 15 minute. It wouldn't be a 15 minute structure, but it would be a 5 minute high and a 5 minute low. That leads to another 5 minute high that broke this structure, that led to this 5 minute low, that mitigated this overall. This looks like it was a news candle, by the way. That mitigated this overall engulfing. As you can see, when price came back down, mitigated it, it pushed up to break structure again and took the structure right here to the left as well. So I hope that answered the question a little bit. If it didn't, I'll try to keep re-emphasizing on it, or as I continue to do these breakdowns, you'll see more example. But let's review. I want to just do a quick review, for example, on the trade that happened yesterday and how we ended up getting failed out of the trade, but still managed to get a 9.7 out of that trade. This is a counter trade, by the way. And the only reason why I didn't continue from the breakdown I was doing earlier from the 15-minute is because the market wasn't allowing me to go down to 5 minutes and 1 minute. So I wouldn't have been able to properly show you guys an entry model. So I'll just go back to here and review some trades. We'll just review some trades together. So here's how I came into the market. I usually get into the market by 8. Let's start 8:05. We're here. Um, and I'm going to let's delete some of these markings. Actually, no, I could just do it on this one. I'll do it on this one. Perfect. Boom. So I get into the market. It's 8:05. And first thing I'm gonna do first is my time. I need to know what time I'm entering trades and what time I'm not. I only enter from 9 o'clock, so I'm gonna put an arrow for my 9. And I exit the trades by 11:30 is the grace period. By 11, I kind of stop looking for opportunities. 11:30, if I do see a spot that I'm hoping price to take, that's where I'll make it a grace of 11:30. Now, the mistake that I made yesterday that I didn't put out was my Asian high was not yet taken. So today we'll put that. The proper way to come into the situation. So we got Asia high. It's not yet taken, right? So if we would have came from the daily, we would have looked at what happened yesterday on the daily. We would have said, okay, we have a mark that price is still heading up to the zone. We see that yesterday price gave us a confirmation candle, which was bullish, bullish. So it wants to go upward. This was yesterday, this bullish momentum right here. Very minimal wick, very small wick, like Yeremi always explained to us. If price is confirmed, look like this one, intent, that it's more body than wick, the chances are it's going to be continuing for a while. More body than wick. Same thing here. More body than wick. We know price wants to continue up. As we can see, this is a zone that's already been mitigated. It's a huge zone. Price wants to mitigate deeper. These are things that's going in our mind. So if I step into the market, I'm on my 15-minute after checking out my daily and understanding where I'm at. I see that this Asian high is not yet taken. I'm looking and I'm going to mark out my highs and lows. That's the first thing I'm going to do. I'm not going to go too far back. I'm just going to say, okay, I have this high here. I know I have one high, boom. I have a low, boom. I have another high, boom. I have a lower low here, boom. Okay, I see price. What did the price do here? Okay, it swept this high already. I know that we already have a BOS here. I'm trying to move this up, but my mouse is moving so slow. I know that I already have a breakup structure here. I'll build up, breakup structure. Okay, so that lets me know price wants to go higher. Oh, okay, another thing I'm noticing, I have an unmitigated OB here. So this was the low that led to that overall high that pushed it up to break that structure. Okay, mind you, it's not my time to enter a trade yet. I'm just looking to see what's been happening so far, and I'm just following along. I also see here, supply that price has not mitigated yet. Okay. Before price was bearish, the last moment we seen was this momentum of the bearish movement. So if I go to the prior day, not changing time frame, just looking back on what's been happening, right? I can see that price mitigated this zone here. This right here ultimately also mitigated this zone here. I'm seeing all of the mitigation that's been happening. That price has not taken any of that. It's probably better to use the one that I already marked, guys, so you guys can see it. Sorry for the back and forth. But you guys are already in the course, so you advance, you can keep up. Boom. To give you clarity, what happened here? We had a 15-minute zone, a low that led to a high that broke this here structure. Price left this here OB. Price came back to it. Now I didn't stop my OB only here because we know we take it to the bottom of the zone. Price came back, swept this low, tapped into it, pushed all the way up here. Cool. Broke this zone here. The low, which was this tap that pushed all the way up here, price left an unmitigated OB in this body here. We won't say this one because you can see all of these were mitigated. All of this got mitigated and it's a trend line here. But this zone right here wasn't. This is where price came back and tapped. This is not during our time frame either. Look at the time, 1830. That's around Asia. liquidity zone. Things is after hours. This is after 5 p.m. This is, I think, Australia probably began. This is a different session that's happening. We're not even trading this session. So the next day when you come in the market and you're marking these zones, you're not too concerned as to, well, why did price come and tap into this zone here? You're more concerned as this is where price came and tap, because that's what's going to give you understanding of what's going to happen next. So I can see this, then this, then this. Price has not taken this low nor this low from this area. So I understand price is still bullish. These are all the confirmations that you need to know. You had a change, you had a break of structure here, you had another break of structure here. So because this was the high that led to this low to mitigate this overall zone here. You may not see the OB in here, but when you go down to like a 5 minute, you'll see that this was an OB in the 5 minute. But right now in a 15 minute, it doesn't look like one. But we'll go down to that time frame. Um, Price also has a trend line right above us here, as we could see. Interesting enough as to why we want to see price go higher, because we also have what, another order block right here that hasn't been mitigated. Right? So we know that there's overall higher highs that price needs to come up to push up here. Because on a daily, what did we see? We saw that momentum candle that got printed from yesterday to let us know that price wants to continue forward, to continue higher. And this could be the higher that we're expecting. Why? Because this was the high that led to this overall low that mitigated this zone here, this OB, and pushing price to, it's expected to push price at least to here. Now, could one say, well, this OB is supposed to push price all the way up to this pink? No, let me tell you how you know it's not supposed to, if you don't already know this, but Yerimi made it very clear to us. If price closes the left only at the wick, that's why you see I put swept. It didn't break structure. It simply just swept the liquidity. Same thing it did for this far left, this zone right here, which I believe is a little bit further on a higher time frame. So we won't go that far out on it. But all it did was swept that liquidity. When price sweeps a liquidity like that, it's telling you that I'm not trying to go forward right now. I need to retrace, get some more liquidity to then try to make my way back up to that zone. If price would have swept this, by the way, these purple, in case you're wondering the difference of colors, I like to color coordinate my zones based on the time frame that they're in. This big purple represent my higher time frame. The big purple is where I find my 4 hour zones. So I know that this was a 4 hour high, that this is a 4 hour low. I could see that the last 4 hour zone that I had was way down here. So I'm not gonna assume that all of a sudden this 4 hour high is now fully bearish for the rest of the day all the way to here. I'm not going to assume that simply because price induced this. I'm not. Now, if this 4 hour high that this 4 hour low led to, which didn't break this, decides to come down and break this, then I can say, okay, now I'm looking to sell down to the next structural zone. That's not where it's at. So that's another tip I would suggest you guys is color coordinate your structures. You can go to your, if you use trade locker, you can, when you tap on it, go to visibility and you can turn on and off where you want it to be seen and not seen. So that
Could
way
you
when
show us how to like lock it? Sorry, I think I missed that part.
say
Now how
that
to lock
again.
that. Do you know the highlight bits? Do you know where I can find it?
Where can you find a highlighter?
Yeah, and how to lock it.
Yeah, the highlighter tool is usually on the left side here. Do you use trading view?
Okay.
What do you use to chart? Do you use trading view?
I don't really use highlights.
Okay,
That's why
you want to
I
use the
never
highlighter tool.
implemented the highlight tool.
What do you use to mark your structures?
Aligns. Do you know them like lines?
Oh, you just put the line for that
Yeah,
high, that low.
yeah, and
When I
then
first began, I used to do that. The only problem with that is you're gonna have 1,000 of line all over your screen. You're gonna have a bunch of line.
yeah,
Yeah, you don't want that. Use your highlighter tool. If you use Trading View, the highlighter tool is right here. Where is it? I think it's right on, is it this side? Right here. You just go to the square where it says rectangle or whatever you last used, you'll see it around that area, and just look for highlighter. And if you want to keep it up here, like how I have mine, I only put the tools that I'm mostly using for quick access. All you got to do is next to it, you just hit that star. Just start it, and it's gonna pop up there. You start it off to take it off. Easy, just like that. Whatever you
All
want
right,
to.
thank you.
Yep. And the
Thank
same way when you want to I mean, if you want to lock it, that's the lock right here. You just click lock. Then that means you won't be able to move it. That's all it is when you lock it. But I don't lock it. I go to settings, visibility. And you could use the visibility edit for anything on the chart, whether it's your your zones, whether it's your trend lines, whether it's your OB marking. I like to put the visibility on the time that I only want to see it in because I don't like to see the mess. Because right now, all you see is what? My 4 hour, which is the purple, my brown, which is my 15-minute structure, and my green, which is my 1 hour structure. And that's what makes it easy for me. Because when I go to 1 hour, look, this is all I see now. I don't see my 15-minute structure no more. I'm only seeing my 1 hour's highs and lows, swing highs and lows, and my 4 hour one. Now I can mark this one and say, oh, this was a 4 hour structure. Technically. Why? Because price came and led to that low, which was more than two momentum candles. All right. All right. Let's carry on and get into the trade so we can just have a Q&A and finish off this session. So we're just going to do one entry situation so I can show you where this whole trade happened. And if you were part of it, how you could have capitalized on the buy rather. So as we already marked, we know that we have this, let me delete this. We know that we have this 15-minute zone that has not yet been mitigated. Price gave us like a relatively equal low right here. So we can assume that this is the liquidity that price will sweep. It will sweep this here liquidity to mitigate into this zone. But this is just assumptions, but we want to wait and see price actually do it. We don't want to just say, oh, this is what's going to happen and marry that analysis. This is just what we're paying attention to. All right, boom. What's next? Let's play the market a little bit. We're not going to play it fast. We're going to play it at a moderate pace as it approach our 9 o'clock. So we're just watching the market. Obviously, we know it's not going to be as slow as, okay, boom, let me pause it. 9 o'clock has came in. It's close to, it's close to, I mean, I'm inside of my entry time. And right now, I see price just decided that it wants to come down a little bit because it wicked this zone. Now I'm going to drop down to the 5 minute, guys, because I have my 15-minute zone that I'm waiting for price to enter from, which is right here. So I don't have to keep sitting on a 15-minute and wait for it to come in there. I'm going to go to the 5 minute to see. Now, in this situation, I want to give you an idea of what I saw and to why I did. Even though I gave you that explanation, it was quick on the Instagram, but I try to give you more of a detail now. I see that price hasn't swept this low here. Let me move the BOS. I see that price hasn't swept this low because this came down here and it didn't mitigate lower than this. It didn't. So that makes me feel like price is not coming down yet. It pushed up. It broke this 5 minute structure. It also didn't come up for this structure yet. Okay. I'm interested in buys either from this zone or this zone here because this zone was a 15-minute POI, I believe. Yeah, see this? Price left two 15-minute POI. Here's one right here, a low that led to this high that broke this structure. That was a change of character. On a 5 minute, this is where the change of character is, right here. Remember what I told you? On a 5 minute, it looks way more than just those three bearish candles you saw compared to the 15 minutes. If I'm looking up this because the screen's up here, guys. So we know we got our change of character here, and we got our breakup structure here. Boom, confirmation. Price has confirmed right before 9 o'clock. Sometimes you don't even have to do all of that back reading and trying to overstimulate your mind, trying to find what price has done last week, last month, and try to put all this together. You don't need to do all of that. I promise. It's a lot simpler. You just need to pay attention to what price is doing right now. Right now, it told us it changed character. Right now, it told us it broke this structure. That's confirmation that wherever the entry is, we're taking it to the next structure. We're not trying to take it to the home run of this structure up here or another structure. We're not trying to do all of that. Maybe price can go that high. That's not saying it's not going to. But we're not thinking of trying to hit a home run. We just want to be a part of the move for that session. That's why I say it's not, you don't have to look for so much. All right. Now I'm sitting here and I'm looking. Now, this is me yesterday. I'm looking. There's an imbalance here. From here to this wick, price simply mitigated this imbalance, not even 50%, maybe like I would say 20%, 10, 15%. It mitigated it. So mentally, I'm interested in price coming back to take more and eventually tapped into here to take this liquidity and this and then push up. But this is what Urimi also taught us. Remember, we have decisional and we have the extreme. This would be your decisional zone. This would have been the decisional zone. And this would have been your extreme zone. Okay? And I'll put it on the inside so that way you can see the text. This would have been your decisional. And this would have been your extreme. So what does that mean? What I first do when I see these types of size and zones, I'll mark it. I'll see, okay, how big is this zone? Okay, this one is 9 pip. That's pretty big. How big is the other one? Okay, this one is 15 pip. That's pretty big also. I like to take 5 to 7 pips. So seeing that, I'm like, okay, it's too high for me. Let me go down to time frame. Okay, 5 minute. What do I see? Okay, on the 5 minute, there isn't an OB here, but there is one here, which is this one, this guy here. Okay, so I still got the decisional, but on the 5 minute, it's right here. So then I'm gonna go down to the 1 minute. This is where I'm gonna be at now. 1 minute time frame to see, because price is already at 9 o'clock. I want to see now what happens, right? I'm gonna leave some of these markings so you can understand it. So as I'm watching price play, boom, it's 1 minute. I see it's doing this returning retracement. Remember, I told you guys every time frame you go to, you want to mark your structure because that's what's gonna help you understand when there's a change of character and when there's a break of structure. So you can look for your entry model. You need to learn the entry models. There's different kinds of entry model. We have the change of character breakup structure entry model. We have the two-leg protocol entry model, which is very much like the change of character breakup structure. I like a lot of the entry models what Carr use because he trades a lot in the 1 minute, and I like to trade a lot in the 1 minute too. So what do I have here? These little blues, these are my 1 minute structure. So this 5 minute high led to this low, led to this 1 minute high, led to this 1 minute low. As you can see, even that the three body candle that I was telling you about, it also applies in a 1 minute for that 1 minute structure. Would we say this right here is a structure from this low to this high, this low to this high? What do you guys think? Is my 9 a.m. American time? Yes, 9 a.m. American time, correct. So obviously you would want to find that time for where you are. That corresponds to America's 9 a.m. and 11 a.m. And if I was trading London session, it would have been 3 a.m. till 5:30 a.m. So you want to keep those time frames in mind. The reason for those time frames, guys, is because that's when you're going to get the most volume. You have New York and London in the market together trading at that time between 9 and 11 a.m. New York just starts at 9 and it leaves the market at 11. In the morning, You had a London session, that's usually a sweep of Asia and all those other time for London session. So that's why if you're trading London, you want to catch the 3 to 5, because what's happening is, like, consider Asia is a vacuum. Asia goes and cleans up all the liquidity that was left at the end of the day, towards like 7 to like 1 a.m. That's Asia just sweeping everything that was there, taking everybody out who left their trades in the market after the market closed. That's what Asia's doing. Then London comes and takes out all the money that Asia done collected. So consider London like the trash person that came out, took out all the trash that Asia done pulled out of the vacuum and dumps it out. New York, on the other hand, comes in and does one of the two things. That's why I also like trading New York session. New York is only going to do two things: continue what London is doing or reverse. Continue or reverse. It's only going to give you those two. It may consolidate because maybe it was so much movement, but that's besides the point. So I played the market through. I'm watching. Okay, from this 1 minute high, I mean 1 minute low, I see the change of character happen here. I see this build up, change of character. Boom, I mark this high now. Okay, I'm interested. I'm paying attention. Now I know there's this OB here sitting here. Does that mean I'm expecting this zone to be tapped right now? I can move this trend line because this trend line wasn't here yet. So obviously in this scenario, this trend line would not have been marked yet because we're not expecting any of that. So let me also remove this. Boom. So price came, broke this structure. I mean, changed this character, broke this structure. This is a 1 minute. These are 1 minute structures getting broken. I'm like, okay, 5 minute structure finally gets broken. Boom. Now I'm interested. Price hasn't tapped into this zone yet. So for me, I'm interested in the fact that it's coming back up to mitigate this here zone, right? If price is coming back here, I'm thinking it's coming to mitigate here. Let me pause to why. As Irimi always told us, because in my eyes, I went to the 5 minute, I see that price did not mitigate this 5 minute OB. And that's why I was inside of that trade, guys. Because I saw price didn't mitigate this 5 minute OB, even though it's been tapped a little bit here, but that's so much liquidity in here, guys. You can't expect this small tap to be enough. Through experiences, I've realized that. Because price did not tap this here 5 minute OB, I anticipated for this 1 minute tap to sell me down, to at least this imbalance. It was a valid trade for the retracement, but it wasn't the proper trade for what the market had already told us when we first came into it and looked at our 15 minute, which we did together, and we saw what it said. It changed character, it broke structure. That's confirmation to let us know that it's coming down to mitigate and push up. But because I went down to the 5 minute and only focused on that 5 minute OB, not understanding that this 15 minute decisional is what tap price mitigated first. It didn't have to come down to the 5 minute. So that allowed me to miss that setup instead of taking the sell right here that it tapped into, where the candle started retracing. I could have taken this buy when price came back down because it was still within our time. So let's go back to 1 minute and show you so you can see. It was still within our time. Price came, mitigated. All this, I was in this entire trade. We've already taken a 1 to 3. Price has already given us a 1 to 3 RR. As we could see, we had we put our stop loss right here. It was a little closer. Our stop loss. And I was taking the trade obviously further down here. But as you can see right here, we already hit 1 to 3. I had already hit 1 to 3 cents up here. I already took 50% profit, 1,500. Down here, I already hit 1 to 6 from here, 1 to 6. So I took another 50% profit. So I'm more confident in my mind thinking that price is coming down to that 5 minute OB that I told you guys about. But price was just retracing to push higher. It never swept this here low from the mitigation that happened. You'll see. It never came and swept it, but instead it did the retracement. So what does that mean? The proper entry would have been the buy. But as you can see, you can still find a trade within the session as long as you wait for that setup. And what was the setup? That's all you got to ask yourself. What, even though he was wrong in the overall direction, and he still got $9,000 made, 10K made out of it, even though he was wrong, how was he still able to find a trade? It's very simple. Look for your setup. What did price do that he's taught us? It reached the high right here. It swept. I believe it swept, or was it a BOS? Let me make it to the top. Properly mark it. Okay, so it be a west.
Can I ask you a question?
Of course.
So, how do you know which OB it's going to go to, if you
Okay.
know what I mean? Because there's
And
two. There's one above that one. How do you
what
know
the
which
one
one
up
it's
is
going to?
about this one?
Yeah, there's one above that one.
Well, I
So,
wouldn't count this as an OB because it's been mitigated already. So anytime I see an OB that's been mitigated, I automatically consider it a failed zone because price usually will fail it when it comes back to it. Let me show you which one I'm talking about. You're talking about this zone, yeah?
yeah, but it's not fully mitigated it. It just slightly mitigated it.
Correct, but it's been mitigated more than 50% at least, I would say. Let me go to,
Okay.
I'll put failed OB like this. Why? Because look what happened. When price first printed it, boom, it came back and retested it. For one, it wasn't an engulfing candle because look at the bullish momentum and look at the bearish one. And then the second candle, which would have made it completely bearish, because if you go to a 5 minute, it's probably OB, right? See, on the 5 minute, it's a bigger engulfing, but look at the size of that wick to the bullish side to push it up. So for you to even see that this could possibly be a OB, you'd have to climb up so many zones. I mean, time frame. But look, every time frame we go to, we can see that the next candle came and retested. You see that?
Yeah.
Every
Mhm.
candle after, the next one came and retest. The next one, even if you go 3 minutes, 2 minutes, you will see that the market kept retesting it. So that's not an OB that's going to hold compared to this one right here. Nothing retested it. You see it?
Mhm.
So that's how you would know which one is significant. And on top of that, there's clarity. I know I deleted the trend line, but look at this trend line clarity here. There's a trend line liquidity right here above. And as you know, if price leaves a trend line underneath the right underneath the zone, chances are it will give you that reaction. Oh, another secret. Here's another tip, guys. Another tip. First, I gave you the tip about the three momentum candles for structure. Now, this is another tip that will help you with zones that although it may fail, you will still get a reaction. Here's how you know which zone you'll still get a reaction. Typically, this zone right here that I took the trade on another day, price would have blown through it easily because that was the trade I took was counter. Pro trend was bullish because price had already changed character, broke structure. How do you know that this is a zone, or how did I know that this was a zone that price would give some sort of a reaction from? Is right here. Anywhere you see a OB is built like this, maybe it's too big. I marked it, my bad. Anywhere you see an order block is left right here like this, and you see 1, 2, 3, or more momentum candles going in that direction, you can bet your bottom dollar price will tap it and give you a reaction. The reaction doesn't mean that price is going to go break the next structure. It's not what it means. It's going to give you, you're going to get at least a 1 and 3. That's basically what I'm trying to say. You will see a 1 to 3 movement before price turns back around and then breaks that zone. As to what happened in this trade that I was wicked out of. Because remember, I wasn't trying to take this trade all the way down to break the structure of all this whole thing to the left. I was taking it to simply come mitigate the imbalance again. Maybe to as a wick, maybe wick in here and then retrace. I was already more familiar for the bullish movement. I already know that it was supposed to be a bullish market. But the only reason why I didn't take this buy instead is because this zone was too big. it's overall too large. I mean, look how big my stop loss would be if I would have taken this trade. Unless I would have taken a trade like a market entry, like guys, your stop loss would have been huge. Too big to even make any profit. You won't even see a 1 or 3. Putting this down here, where would you take it? To the next break of structure? Price didn't even come do that. And look what that gives you. Wait a minute. Let's go back to 15 minute where it was. So to answer that question, yes, that's how you would know is by look at that. It's a 1 to 1. Really? You mean to tell me you're gonna jump into a trade, risk $1,000, and all you're gonna probably because price did consolidate when it got to about after it took my zone right here, it just consolidated. So you basically took that trade for a 1 to 1. You risk $1,000 just to see $1,000. That's not what you're here for. All right. So let's finish off right here, go back to this as to why I took that sell. So you really want to just be in your time frame, as you see my two brackets here, 9 and 11 or 3 and 5, whichever time you're trading in. And you just want to be looking for the next change of character followed by the breakup structure. Once you see the change of character followed by the breakup structure happen, your alert should go up. Okay, a change of character happened. Quickly, you want to see what low did it lead to. Once you see it leads to a low and it starts giving you retracement candles, starts going the other way, then you want to mark that low, put a line there, put break of structure, and know that this is where you're waiting for price to come break to give you confirmation that whatever OB you find above from where the change of character happened at will be valid, which is what I did here. After this change of character happened, I waited. There was a trend line. I waited. This break of structure happened here. Then I said, okay, cool. This zone should give me something. That's just because of that trade. Would Urimi say this was a great trade? He would be like, that was risky. The reason that was risky is because he's taught us our invalidation model. Price had already tapped into the demand. If it taps demand, this will fail because it tapped here first. Then it came up here. The only reason why this gave a reaction, guys, is because of the little tip I just told you, because of the many momentum candles that happened from this zone. Had there not been momentum candles and it was just this order block and maybe like 1 or 2 and then another bullish momentum and then 1 or 2 down, price would have, you see how big this approach was? I'm making a mess right now. You see how big this momentum candle is from right here? This bullish, price would have just came another bullish, push right through. But because of this momentum down, there was a lot of money injected into the market from right here that pushed it all the way down here. It gave us a reaction enough to come back and pick up liquidity from this wick to then push it up to do what it did. So those two tips, I hope gives you some clarity. I know tomorrow we're gonna have a Zoom call with Urimi, so definitely pay attention to some of this little information. I think those two tips I just gave you, as far as the 5 minute structures, the 3 momentum candles to mark out your structures, that helped me a lot. I promise you guys, a lot of my trades that I was losing within the first 90 days of this program that we all been in was because I couldn't mark my structures right. I was marking what I thought and felt was supposed to be structures, but the course never really gave that little tip. Oh, look for a 3 momentum candle, and then you will know it's a structure. There's nowhere in the course he says that. And I'm not saying that he didn't give that information because he didn't want to. It's just not something that just come off the top of the mind. But because I kept having that problem and I spoke to another trader that was next to me, I said, hey, look, why does this fail? Why did this zone not hold? And he said, that's not a structure. I said, yes, it is. Look, this low led to this high, led to this, led to this high. He said, no, that's just internal. It's not a real structure. It probably just did this. I'm like, oh, he said, yeah, what you want to look for is 3 momentum candles. Changed my life. Changed my life. From that point on, I tested it out. So before you just take what I say and run with it, go test it out. Next time you marking structure and you see a 3 momentum candle, mark it and see if price respects it as a structure or not. That will give you your own confidence. So that way you understand the information you got It's good information that you could use going forward. And the second information is what I just told you. When it comes to an order block like this, if you see those 3, 4, 5 bearish momentum candles back to back like this after it, right here, as I mentioned, this area right here, you see those momentum, even if it's supposed to be a zone that's supposed to fail, price will give you a reaction from there, and you will still get at least a 1 to 3. I mean, look, minimum. I'm not gonna even go all the way down to where I was trying to take it from. Just putting it right above the high. Even if you took it to above the overall zone that Yeremi always told us to go to, you still get a 1, 2, 3. You guys with me?
Yeah, thank you.
Yeah, you're very welcome. So I'm gonna cut it
I have
here.
another question.
Go for it.
Sometimes I've noticed that price breaks the OB and then melts. So say like you've
Like
marked
an
out a
inducement.
valid zone, you marked out a valid zone, and then instead of price respecting it, it just breaks through it and
Okay.
then it melts.
Yeah, I can
So
find a zone that
could you
happened.
explain like
That's yeah, so that would be the inducement that that we've been taught about, the 15-minute inducement. So when price do that, usually it's because price is not trying to go the opposite direction. I'm trying to find a zone that it happened into recently. It might be on my Euro USD. I could find it for you easier. I trade 3 pairs, Euro USD, GBP, and NAS 100. Um, Let me see if I have it in my Euro USD. To answer that question, when that happens, there's an there's a zone or order block that you're waiting for your buy or your sell, and price comes, and instead of tapping it and then coming down, you see that it comes and induce it a wicks above it and then starts to come down. The reason that happens, usually it will be because of the invalidation model. Chances are price had already tapped into a demand before that supply, or vice versa. If you're, for example, let's say option I flip this chart, if it was a downward trend, if price would have came and tapped here and it broke, let's say price came down here, let me use this. I just flipped the market, that's why it looks upside the other way now. Let's say price came down here, right? Um, no, it's too. Let's say price came down here and mitigated this zone. This mitigation of this zone right
طلعت
here,
باقص على السوق داي ما فهمت شلون ولا
if price decides to come back up here,
ها
it's not gonna respect your zone
can you
here.
mute Aisha?
أنا باقي خير هذا كل سنة
This is where you'll
مسكين
probably see that
اقرأ ويدا
inducement we're
شيء
talking
أنا
about.
شيء حد يا أنا
Okay.
محدد exactly like محلتها
Are
Hello
you
Aisha.
speaking
أنا
with me?
Salam
exactly
Aisha.
like أنا سيري إذا ليس عمل أنت فولتي for like 3 days أنا
Okay.
مركي 10 cent
I don't know if she's speaking with me, guys, but if I answered that question, I hope I answered that question. But what I'm trying to say is, if that happens for anyone else who might have the same question that she's asking, understand if price comes and mitigate this zone here and decides to retrace, and as you can see, this trend line and induce right here, and then decides to come down further to create a new lower low, well, chances are if this is what will happen. If it does this and it decides to come create a new lower low, like here, it's not because of any random reason. All you can see is this high led to this low led to this high. This is simply internal structure. The overall zone you're playing in is here. As you can see, I've marked it. Is here. You're playing between these two zones because this was the high that led to this low. This is all internal, which means they can be liquidity. So price could say, all right, I could tap here and come up to this imbalance and go instead. Or it can say, you know what, I want to take all of these sellers out. All of these sellers these buyers, I want to take them out And all of these sellers right here, I want to take them out. So when it came here and mitigated, it decides to come up here and induce. And that's why she will see that wick she's talking about that happened above the zone and then price decides to come down. It's because this high right here is not as significant as this overall high that price started from. This is the overall high that led to this low that began this whole movement. So this low just did this whole movement simply to come take everybody here out as a liquidity sweep. And these people then get swept out too to come push a next bearish movement. Because why? You had a break of structure right here to let you know it wants to go down. And then now when they come here, you're going to have your next break of structure to continue the downward movement. You get it?
Yeah.
Okay, perfect. All right,
Thank
guys.
you.
If any other questions, last questions, anyone else have a question?
Sorry, do you just read the New York session?
Do I just trade New York?
Yeah.
I trade New York this month. I like to gather data before the month of April. I used to trade London session. I would wake up at 3 a.m. I'm in America, so I would go to sleep at like 6, 7, 8 p.m. to wake up at 3 a.m. just to show up to the London session. I did that I want to say I did that for about 4 months of EU, Euro USD. I wasn't trading GU. I was only focused on EU. And I got enough data from EU. I didn't trade New York session a lot, so I wanted to focus on New York session so I can understand them. So during London, I focused on a different type of strategy, which was the unintentional movement, liquidity sweep, follow in the expansion. I focused more on that strategy. But on New York, I focus on a different strategy, which is more of let me see what London has already done. Let me see what Asia already did and Frankfurt, and let me see what direction the market is trying to go. Oh, okay, the market is telling me it wants to go bullish. Fine, I'm finna take a bullish trade. Oh, the market is telling me it changed character to the bearish. Okay, looks like we're about to go sweep the London low or sweep some liquidity that happened during London. If London was bullish, then I'll take the sell to come sweep all of that. So I've learned that by trading different sessions and structuring my time within those sections, meaning like gathering data. With trading, guys, you just want to focus on data. Gather as much data about yourself and the market as possible because that's what's going to help you become more confident on which session's best for you. I like London, but compared to the setups that I take in New York, I like New York a little bit better with GU. This week, I only took 3 trades. Monday, Tuesday, and Friday. I had no setup on Thursday. I had no setup on Wednesday because it was news. As a matter of fact, those trades are here. That was the one I just showed you guys today. And look, this was the other one that happened on Tuesday. And where's the Monday one? Forgot where the Monday one was. But yeah, this was Tuesday's trade. Didn't take anything on Wednesday. It was news. Didn't take anything on Thursday. It was news. And we had that one trade Friday. Pretty much that was it. 3 trades a week. Literally, I take 1 trade a day. But my trades, because of the patience and me waiting for my setup and my change of character, break of structure, that's all you want to look for. And if you have any of the boot camps, guys, I would say, I actually messaged this to somebody today. Get Hell Week. Hell Week is great because Wakar gives you an amazing explanation of the entry models. I think he give like 3 different entry models. That's another thing that's going to help you a lot is learning your entry models. If I can find them.
So
Yeah.
tips to take away from this, would I need to watch like inducement videos because I don't quite understand inducement how it works. So if you were to obviously give me some tips, what would you recommend for me to watch?
Yes. Tip for the inducement, I would say 15 minutes. Focus on the 15 minutes when you're looking for inducements only. Even Urimi's folks says that 15 minutes is where your inducements are valid from. Obviously, inducements happen in all parts of the market. You have 1 minute inducement, 3 minutes, etc. But they're not the inducement that's going to lead to anything significant. The only inducement that will is the one that happens on the 15-minute. And I tried to see if I could find one before I left to show you so you can see a 15-minute inducement happen to a structural zone. That way you'll see, oh, okay, so when price just makes, oh, perfect, boom, here you go. Inducement right here. So what did price do? This was a structural low, a structural zone. This low led to this high. This low led to this high. This low led to this high. Price could have came and just said low and continue high, right? Because it's changed character internally here. It broke this structure, broke this structure, broke this structure. Could have just went and break this, make a new structure and keep going. But no, Price wanted to take this people out. So what did it do? It came down and wick. It didn't close a body. And it's important, guys, let the market finish printing its candle. A lot of people they assume that the market, because it's wicking back and it's like 3 minutes left in the candle, they say, okay, it's gonna close the other way. They just take a trade. No, let the market finish printing its candle. You will always have time to put your position. I promise you. I used to be in that shoe where I used to think I won't have time to put my setup because market's moving fast. It's your mind is just moving too fast. The market is
So
moving
how would you
fast.
know? How would you know it's finished printing?
Well, when the next candle starts.
So do I need to look at the 1 minute or 15 minute?
No,
Because
yes,
say like if I'm looking at the 15 minute and I
15
wait for the
minute because
cancel
you're
to
looking
print.
for inducements. I would say the 15 minute if you're looking for a medium inducement. Remember, there's different type of inducements. There's the minor inducements and then there's the medium inducement. You want to find this medium inducement right here. You want to wait for price to finish printing. So if I'm here in the market, this is the last that the market printed. High, low, high. I already got a break of structure. I got another break of structure here. I'm expecting for price to come mitigate something, but there's no OB here. So I'm sitting here like, okay, well, what is it going to mitigate? There's no OB. I might go to the 5 minute to see, is there an OB here? Oh, there's a small 5 minute OB here. So maybe it's going to come to this zone. But then I'm going to look and see, I would have to take it from the overall, but I'm like, price could easily come and sweep. Let me move this. Price could easily come and sweep this overall zone. Why? Because look at this line down here. That's why it's important to mark area that price hasn't swept yet, because then you will know that price can use this as liquidity. Because you see this line right here, if I go to a higher time frame, I might see it better to see what exact area it is that I marked it from. Because I can't, oh, right here. So it was a 4 hour. See this low I marked from the 4 hour? Why did I mark it? Because I saw that the last time price visited this area, it didn't take it. Why, price? I'm thinking in my head, why didn't you take that? There's an imbalance right underneath it. Why you didn't take this low? Okay, that means you're setting the market up for people to think that this low is going to be respected for whatever reason. Sometime you'll come back and visit it. So as soon as I would have seen something like this happen, this change of character to the bottom, which would have been a break of structure because this is 15 minute, but on a 5 minute, the change of character already happened up here, break of structure here. I'm expecting that price is going to now take this liquidity of this right here, simply because it's been sitting here. And that's what happened. That's how you would know, from to your question, that's how you would know when that 15 minute inducement happened. Boom. You see, as soon as that finished printing right here, you don't have to jump in the trade just like without any confirmation. You don't jump from there. Now you just have to wait for the market to give you a break of structure. Right after this 15-minute inducement happens, right? You with me?
I'm with you.
The next thing I would do after I see this mitigation happen, the printing of that candle is done. It did not close a full body. I'm going to my 1 minute. Because now I'm going to wait for a change of character, break of structure. That's it. That's all. If it's within my time, because look what time it happened at 1:28 a.m. That's not even our trading window. But if I'm doing it during London, because it's London, you're trading, let's say, I would mark my 3 a.m. right here. I would put it for 3 a.m. and I would play them. I would watch the market until I see my change of character, break of structure. That lets me know I can enter the market for a buy. Because if this inducement is valid, I would have to see it from a change of character, break of structure. But if it's not valid, it would just come to price would just retrace and then come right back down and break it again. Let me move it faster. Okay, I'm watching. It's concerned. This is all before your time, anyways. You're not supposed to be trading right now, anyways. This is not even 3 o'clock yet. You're just watching. You're just a watcher. Watching. Boom, it's getting close to your time. What happened? You got a 1 minute change of character here, because this is a 1 minute high. Broke that structure, and it broke this structure. Now you know you're in a bearish market. So all you got to do to look for now is an order block, which is right here. Price left you a nice order block right here.
Thank you so much.
You know what I mean? And then you wait for price to come down and tap you in within your time. You could either wait for it to tap you in, or you could be more advanced, which is if it gives you a change of character to the bottom, you take the sell down to the zone. That's called a ping pong method. you take it down to the zone that you're expecting to buy up from. So once it get there, you get out and then you buy up from where you're trying to actually go. Got it?
Got it.
All right, guys. I appreciate you guys showing up. Anybody else have any other questions before I leave? You will see the countdown on the right. Oh, yes, that's somebody just answered part of your questions too, to see when the candle will close. On the far right, right here, this is what he's explaining. On the far right here, obviously right now because the market is closed, you don't see it. You will see where there's a clock counting your trade. If you don't have it, you go to settings. In your settings, I think it's called in the trading, is it, or is it the status line? Yeah, right here. Scale and lines. You turn on countdown bar close to bar close. You want to turn that on. And that's what's gonna show you the pretty much the clock counting down before a candle closes. All right. All right, guys. Any managed to give us a lot of gems. Now, of
No,
course, guys,
thank you.
let
I've
me
learned a lot.
Of course, of course. I'll try to do this every weekend or every Friday and Saturdays. As I continue to learn, I watch a lot of courses of Yerimi's and review a lot of them. So I'll try to give you more gems as I go because I know a lot of you guys are already in the course. So I'll try to make this a situation where I can help review with you some of the things that maybe you did know or maybe you didn't know or didn't quite understand, give you clarity and also little things that I come across, like those little 2 tips that I gave you about the momentum candles or the zones. It'll help a lot, and I'll always try to share that with you guys, man. So let me know how you guys feel about this session in the chat if you may. I'll try to see if I can repost this into one of the, I'll save this video. I'll see if I can repost it into one of the resources tabs, which I'll make available to everyone else. So I'll add you guys also to that resource tab, just like I added you to the private FX community chat. That way you can always go back and review some of this if you forgot or you want to review that example I gave. Also, feel free to message me in the group chat on Instagram that I sent you, and I'll try to communicate as best as possible. All right, guys?
Are you on Urimi's?
Say that one more time.
Are you on your Urimi's course?
Yes, yes, I am. I've been in Urimi course. I've been trading there. I met Urimi in person here in Miami. He came, I think it was like a year ago, back in like I want to say September or August, and he came over to my spot, to my crib. He had already befriended my brother, my older brother. Him and my older brother were already close. So when he came, that's when he met me. He actually walked into my room as I was studying, and I'm looking, and I'm just beginning. I just looked to my left. I'm like, what the heck? It's him standing at the door, and it's him in my screen. I'm like, what? What? This makes no sense. 'Cause I didn't know he was like, he was gonna be there. My brother didn't tell me anything. And I was like, whoa. And then, we chopped it up. We got to know each other a little bit more. Fast forward. I'll be out there in Dubai this coming next month. So I'll definitely go get some more information in person for you guys that if we, I mean, obviously he's giving us all the information, but it's a different thing when you can have a situation like this right here where we can just have a back and forth interaction as if we're in person where you can ask these questions and I can answer them quickly or look at your computer and see something you're doing wrong and give you and help you polish. I think that will be one of the biggest benefits of going to Dubai also, besides networking with other traders, is to learn little tips and pros that other people are doing or that they've learned along the way. Like the tips that I gave you guys, these 2 things, I promise you is going to revolutionize your structure and your entries simply because, it's just what it is. But yeah, other than that, just as long as you focus on these things within your time frame, you should be good. And I'm gonna close this. I want to just show you this last thing right here, so that way you guys don't go mess up and say, "Oh, he told me this and it didn't work." Look, you see right here, this is an OB with multiple momentum candles, and price gave no reaction. It just bust through it, right? But what did I say earlier? Oh, if there's an OB, price is supposed to at least give a reaction. It's not even inside of our time. Time is the number one most important factor that would make sure that what you are taking or any zone is valid. If it's outside of that time window, you can't expect this. Look when this happened. This is Frankfurt. This is supposed to be liquidity. This is what we call a smart money trap. This is a smart money trap because it made you think that this high that led to this low that swept this was somehow supposed to be valid. Even though you know it's not valid, you're gonna think, oh well, even though he said it's not valid, it's gonna give us a reaction. It did a small reaction when it tapped here. You see it came down a little bit, but it's not gonna give you the reaction that you saw I had for a 1 to 3 or more, 1 to 9, because it was not. Simply because it's not within your 3 to 6, 3 to 5 window where there's a lot of volume, a lot of money injected. You know what I mean? So keep that in mind, guys.
Do you have a course?
No, I don't have a course. I'm not a professor. I just like, how do I say it? I like sharing what I'm learning as I go. I like having a trading community. Like I have friends that trades next to me, or like I just like that type of environment. I think iron sharpens iron. So if you're in a room with multiple people who's doing the same thing, that energy itself is going to drive you to push yourself more. And if your iron is not as sharp, then the person next to you, if their iron is sharper, they're gonna sharpen you up to where you're gonna, get more better and better and better. So maybe one day I may have a course, but right now it's not my focus, to be quite honest. It is a lot of responsibility to have a whole trading course community and trying to do all of that. Eventually, I will do one because I want to take this education and not just do it in English. I want to take it back to my country. I'm originally from Haiti. So my first language is Creole. So I want to eventually get a course in Creole so I can go teach it to my people in Haiti in Creole because that our country needs help. So I know that if I can get enough people in Haiti that can start printing this type of money on their own, they can help the country and this
That's
thing.
amazing.
Yeah. So that's what
Hey, hey,
I'm hoping for, you know.
hello, can you hear me?
Yes, I can hear you. How can I help you?
I was asking about the Yarimi University. How does it operate or how does it work? Because I've never been there. I want to join.
Ah, okay. So you're new. So a lot of this might have been crazy for you, but so Yerimi University, he does have I could pull it up. He does have what's the word? He does have, I don't know if enrollment is open, but right now, these are some of the courses that I review. I have a couple pages. But this is it. You go to your ribbonuniversity.com. You go to the sign up process. If his You may make it to this page through his Instagram. What happens is how it works. I don't want to go too long. Let me just answer your question. How it works is you sign up. It's very affordable, man. Yerimi's not doing this for money, and that's what makes me even love his program even more compared to other people who's selling for thousands of dollars, hundreds of dollars. I mean, the information he's giving for just 99 pounds one time. You pay that one time, brother. You don't pay that every month. It's not a one time you pay that. You have access to this man and people like myself and other people in that course for the rest of your life. And in the course, you would get this right here. You go to the library. What you will get is only this first one here. All of this you see at the bottom, these are just boot camps that I added along the way. I have another page where I have 2 other boot camps in, but these are the boot camps that I added on this page. Um, you'll get this, the Udemy official course. Inside this official course is where you get all of the basics, and in here you get all of the Zoom calls that we do, which gets recorded. Obviously it's ran by Uremi. I'm not an admin in his course or nothing, so this is not no ads or anything like that. This is just me speaking from a honest perspective, giving an honest review. You'll get all of these right here. He teaches you the basics. As you can see, if you want to take a screenshot, you kind of get an idea. These are all of the basics that you need to simply understand trading. It's not going to be enough to take you from zero to now you're making hundreds of thousands of dollars. No, 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 no. This is just going to give you an overall understanding of what it is trading is and what type of strategy you are trading or need to be trading. From there, you will go to the back testing. I'm not too big of a fan of this back testing area because the guy who explains it, he was a bit, maybe it's because I wasn't as advanced now, but I didn't quite like it when I first did it. But mentorship group session, these right here is really where I picked up my momentum from watching these Zoom calls. And this goes back from 2022 all the way up to date. As you can see, 2024. He hasn't put any for 2025 yet, because he's going to revolutionize the page, update it, and then add all of those 2025 Zoom calls. So whether you're in now or you decide to join in the future, etc., you will have access to all of, look at 10 pages of Zoom calls that has happened where he's breaking down charts, giving out gems. People are asking beautiful questions like how she's asked so many questions that you guys was able to pick information from. So you have people asking these types of questions that you might have been thinking or maybe didn't know you needed to know, but then once the person asks you like, oh, okay, and that helps you out as well. You know, you got to learn from one another. So that would be my honest to express to you, you know, what is it like? It's pretty much that. You get these information, and then when you start to feel like you want some more information that is focused on a specific topic, that's when you start to go into boot camps. Boot camps will have certain things it focuses on, and then you'll know you'll sharpen up your tools. All right, brother?
So, so all of that videos are pre-recorded, yeah?
Yes, these are pre-recorded. The one that are not pre-recorded is when he releases a new boot camp. If he says, "Hey guys, I'm launching a boot camp on this date," let's say May 1st, he says there's gonna, it's not a real, but I'm just assuming. If he says, "Oh yeah, May 1st, we're gonna launch a boot camp," and he does it like once every 3 months, sometime every 6 months. He doesn't do it every month or anything like that. Then he'll announce that boot camp, and you can purchase the boot camp. Same, usually the same amount. Usually, I'm not gonna say it's always the same. Usually the same amount, 99 pound, and you buy that boot camp, and you're live in the boot camp. Let's say this was a boot camp right here. You see how you're in this call? And
Yeah.
every day, let's say we did this for every day for 5 days, Monday through Friday, and I record it like this, it then gets put together into what's called a boot camp and then put out for people who didn't get to make it to the live one, like how you're in this live call. They can now go back and rewatch it, and now it becomes a pre-recorded.
So you get to meet Yarimi like this, like live. We talk to him one
Oh
on
yeah,
one.
yeah, of course. On the boot camp, yeah, 100%. Even on the regular Zoom calls. Once you're in his community, you get to see him all the time. Yerimi is the one who does the course. It's not like one of those programs where you buy something, it's some random person teaching it, and he's just the person doing the advertisements on the internet. No, no, no. He is the one that's running his whole program. So you don't have to
So
worry
the
about
Zoom call are weekly, yeah?
every
Every
Sunday.
Sunday.
Every Sunday
Every
or
Sunday.
Monday. Like we have one tomorrow, unless he has like an emergency, it'll be Monday, but usually it's every Sunday or Monday.
Oh yeah, that's good.
Yeah.
So you must watch all the video from those years back until the 2024 for me to reach somewhere like you.
I'm still climbing up the chart, my brother. But yes,
Yeah,
I
I
would
know.
definitely say you must put in the hours. When I first began, guys, in August 2012, I said 2012, August 2024, I've only been in the course for about 8 months. But my growth within that 8 months after, well, next month, the 12th of next month will make it 8 months, I think. But the reason I've grown so fast is because I studied a lot. I was studying for 8 hours a day. I treat it like it was a job. Um, I literally will wake up 6 a.m. I created a structure. I woke up at 6 a.m. I even have, you have to change your life, to be honest. I used to have this notepad here where all I did was mark out my daily activities. You can see where it says daily activity. I wake up 6 a.m. I go to the gym. I meditate. I take my medicine. I said medicine. I take my vitamins and everything. I didn't read any book, but as it says, wake up time, workout, hydrate, cold shower, morning affirmations. I eat breakfast. I review the previous day trades. Then I have my objectives for the day. I would read the financial news, which would be this here. You guys want to always check on Forex Factory. You don't want to just jump into the market without paying attention to what day the news are coming from. If you don't know that news is coming, you can get caught in the sweep. Zones that you think you're supposed to be respected gets violated because you simply didn't realize that there's going to be a news candle. As you can see, Wednesday, look how many news candle happened in London session. I am not trading that. Why? Because I stopped trading at 5 if I was trading London, but from 3 all the way to 4:30 almost, even though these are orange, but they still give a reaction. Price is doing all this news. So I skipped that session. I would skip it. Come to New York. What happened? From 9:35 to 10, price is giving news. That only gives me a 1 hour window to trade. I showed up to the market. I still marked out my zone to see if anything happened after the news. But guess what? I didn't have any setups. There was no setup of change of character, break of structure for me to enter from to take or any two-leg protocol. So that's why I didn't take no trades those days. But so that's very important to pay attention to. And yeah, that would be the most thing I would say, brother, is you really have to lock in. I did lock in from I would what 8 a.m. till about 12 on the forward testing. And then from 12 till about like 6 p.m., I would just be doing reviewing and back testing. Typically, I back test on this platform, guys. I don't back test on here on TradingView. I would back test here. This is TradeZella. With TradeZella, I could back. Oh, I guess they don't have my thing. Sign me out. But with TradeZella, it allows you to back test and actually take the trade as if you were in a real market, and you can actually see the outcome. And you could put your journals. You can notate why it failed, etc. That was another thing that helped me out a lot is journaling. You want to journal on a platform. You could journal on your books or on a document if you want. But for me, it was better to journal through TradeZella because it was easier to keep everything in the same place. All right. All right, guys. I appreciate you all showing up today. I'll let you guys know in the chat, well, in the community chat if and when this gets posted. I do have an appointment to get to at 2:30 for a tailoring. I got to get my suit finished up for the trip to Dubai to go see Remy and the rest of the guys. If you have any question, feel free to DM me, shoot me a message in the Telegram in the Discord or IG. And yeah, I look forward to doing this with you guys again. I had fun. I enjoyed this moment. I enjoyed all of you guys' questions. I appreciate you guys showing up to do this with me. For right now, it was more so me showing you a little bit of a trade that I recently took. Eventually, we'll get to the point where we're all will be somewhat on the same page with understanding trading to where we can dive into an actual back testing platform like TradeZella, where we can go together and decide on would this be a zone, would this not be a zone, and then more interactive, take the trades or not take the trades and learn from there. All right, guys.
Okay. Thank
See
you,
you
bro.
guys next time, man. Peace.
Merci
Last question.
Go ahead,
Please.
brother. Last one.
In the Yarimi's page and in Instagram, when he says he's taking new students, like when I join the Zoom call, which you will enter, it's the same I will enter,
Yes,
and
those would be
and
the
I am a
same calls I would
beginner.
be on too.
But
If that
I
answers your
joined
question.
recently.
Yeah, those would be the same calls that I would be on to.
Oh, okay.
Yeah, we're all on the same calls. Anybody else who's not in Urimi University, whether you're thinking about it or you're a bit hesitant or if the enrollment is currently closed, the question is to ask me, do you think it's worth it? Is 100%. 100%. I know what I know now because of that course. So yeah, definitely give it a shot, guys. It's 99 pounds and you won't regret it. All right. But this right here for us is always going to be free. So don't worry. I'm not charging for none of this. I'm not looking for this is just me having a good time reviewing. This helps me just review what I already know anyway. So this like a way of revision. And like I told you what my goal is, what I'm trying to do for my country. I want to eventually get to that point where I can reteach this in my original language to my people in another country and also give it to them at a free rate so that they can also help change my country. So with no further ado, guys, I will see you next time and I'll see you in the chat. We'll talk later. All right, guys? Enjoy the rest of your weekend. Take care.
Okay, fam.
All right, later.